Well, welcome to another Workshop Wednesday brought to you by schoolofbookkeeping.com, where it's casual conversations for serious workflows. Hi, Rachel. How are you?
I'm good. How are you?
You're eating.
No, I don't know what you're talking about.
Don't know how that got in there. Apparently, the intro video is not long enough for Rachel to get a little snack. We'll have to extend that for next time. Well, today we're going to be talking about this is kind of like one of those fundamental truths that I like to call. We talked about the fundamental truth of the opening balance of when you go to reconcile, right? Like there is always something making up that opening balance. You can't just change these things. So in QuickBooks, there are some things that are just fundamentally always going to be the case, right? And when you understand those things, it I think I hope that there's a light bulb that goes off and like, okay, it allows me to work within those confines when I know the rules of engagement, or I know the rules of what QuickBooks is doing, then that allows me to work within that. Rachel, what do you think when it comes to some of the shenanigans of of QuickBooks?
Yeah, I always sort of figure, there's always like I think as your example is like for opening balances and that kind of thing. I usually, if it's something that I'm a little unsure about within QuickBooks, I always just sort of go with the rules of accounting is that there's two sides to everything. And so, that's just when you have a new QuickBooks or a new account or a new something, if there's something that just sort of appears there that you're not really sure, I just usually always think about the rules of accounting, and that kind of helps me. But I'm not the QuickBooks expert, so I'm gonna let you. Well, I
All right.
mean, I definitely at this point I feel like I'm probably an expert level, but not compared to you.
All right.
So if you're getting at something specifically, I'll let you explain that.
Right.
Because
Right.
sometimes I have to work myself backwards. I'm like, okay, accounting is telling me this,
Yeah.
but what is
Well,
going on in QuickBooks? So I know enough to know those are two separate things sometimes.
yeah. So this is one of those situations, and I bring this one up because we had a quick answer client that came into School of Bookkeeping and was like, what in the world is this account and why is it on my balance sheet, or why is it on my profit and loss? And this is one of those things. I mean, I worked into it for 18 years, and this was a constant question that people had about this unapplied cash payment.
Yeah.
And I think part of the confusion, especially if you've worked with QuickBooks, both platforms, desktop and online, is it's one of those things that's not in QuickBooks Desktop. It is in QuickBooks Online. So especially if you're coming from desktop, it's a foreign thing.
Yeah, for me
And
too, because I worked in other accounting softwares before and I hadn't seen that.
right,
And so, yeah, I mean, I know what it is now. Actually, I think probably thanks to you. But
yeah,
yeah, yeah, I'll let you
you
get
are one
into
of the people I've told this to. But we have a blog on School of Bookkeeping that talks about this account, and we'll go in and I'll share my screen and everything, and we'll kind of run through a scenario of that. But I'm trying to find the place to put it in there. There we go. Sometimes talking and clicking is not my strong suit. Do you have the same problem where you, or can you multitask that
I
way?
can multitask.
Oh, see,
Yeah.
maybe that's something that we should learn
I
from
am
each
right
other.
now. I'm baking cookies right over here.
Uh, it's
I'm
like
just
an easy
kidding.
bake oven over there.
I'm just joking.
All right, so this the challenge here is that on a cash basis, when you run a profit and loss, there is a special account, and this is again, kind of leaning into some of the functionalities of QuickBooks that are just kind of, they are what they are, and they aren't what they aren't. Right? You just kind of have to work within the rules of the game until they change the rules, and maybe they won't. Right? Because if you look at QuickBooks's article about what is this unapplied cash payment account. And you see this for revenue and you see this for expenses.
Mhm.
They're referencing some obscure IRS article that says when you have a payment that is unapplied on a cash basis, here I'm putting all these words in together, right? You have an unapplied cash payment, uh, you need to recognize the revenue, right? So the situation, the workflows is I have an invoice and then I have a payment. If I have a payment that is unapplied to an invoice, I can't recognize the revenue off of the invoice because it's not tied together, right? So when that occurs, uh, it puts the revenue into this nebulous unapplied cash payment account. And when that happens, or when people see that, they're like, why is that there? Right? Well, there's two scenarios that make that happen. The easiest one to explain is you have a payment that's unapplied, right? Um, so when you record a payment, customer payment or a bill payment, and don't apply it to its preferred transaction of an invoice or a bill inside of QuickBooks Online, and then you run on a cash basis, QuickBooks, according to this IRS regulation, needs to recognize the revenue of that payment, which makes sense, from a cash basis, right? You're receiving cash, that's revenue.
Right.
You want to recognize that, or you've paid for something, you need to
Well,
recognize the
the
expense.
cash is only revenue on a cash basis.
Right.
If you're on an accrual basis, cash isn't revenue.
Right.
But
That's coming from someone going through their master's in accounting.
yeah. So, well, because you're talking about on a cash basis, and so I think it's important to say that typically when you're issuing invoices, that's sort of by definition you're operating on an accrual basis, because invoices and bills, meaning accounts receivable and accounts payable, are usually a functionality of an accrual based business. A cash business, well, recording on a cash basis and running reports on a cash basis are a little bit two different things. But if you're actually, let's say you're running your business on an accrual basis, but let's say for some reason that invoice date is further down the road, but you've somehow already accepted the cash on your books.
Mhm.
When you run a cash basis report, if the invoice isn't present yet on that earlier date, it's going to throw that cash deposit into unapplied cash income. Is that right? It's
Yes.
really a timing thing.
Yeah. I mean, the whole purpose, to your point, the whole purpose of doing an invoice and a payment later is to account for the passage of time between the time that I've sent somebody an invoice and the time that I've received a payment. So this gets really wonky when, from the IRS's standpoint, is this company a cash-based business or a accrual-based business? Because you're doing things you're using accrual transactions in a cash basis. So what does QuickBooks do to kind of tie that back together? Is that when you do use accrual based transactions, invoice payment, bill payment, to account for the time passage of time, because you want to run reports of like what's overdue, and those types of things, in order for it to recognize the revenue, it bases things based off of the payment date as opposed to the date of the
Right.
invoice, right?
Right.
So herein lies the dilemma. You're running a cash basis company, but you're using accrual type transactions
Yeah.
to resolve that dilemma. It will recognize everything on a cash basis based off of the payment. The payment is the
Yeah.
source of the revenue, right? So in
Which
this,
I don't love. I'm not gonna
right,
lie.
right,
I've
but
already
this,
stated this before. I'm not a fan of cash basis, but I'm a hardcore accrual gal. But I do get the benefits. There are obviously, tax related benefits to running your reports on a cash basis. I usually always enter the data on an accrual basis, but yes, I have clients that run their reports on a cash
right.
basis.
So, this is one of those other fundamental truths of like, okay, I have an invoice dated last month. I've received a payment today. QuickBooks is going to recognize the revenue when you do it right, right?
Mhm.
When you've tied these two together, QuickBooks has no reference to the revenue or anything else associated on reports
Right.
when it comes to a profit and loss last month, because regardless of whether you created that invoice last month, last year, whatever, it doesn't recognize anything until it gets to the date of the payment that it's applied to.
Yeah.
And
And in
that,
some situations people really do want that because they might have some customers that are 30, 60, 90 days, and let's say they're getting paid after the 90 days, and in some situations they might have sent the invoice in September and it's now January and they're only receiving these cash payments now. There might be an advantage of recognizing that on a cash basis in January versus when it was earned, which is the definition of an accrual basis. And it's,
right,
by the way, I usually always say, even though I'm working towards that, getting my master's, I usually do. I explain how that works, and I say that there are benefits to, sometimes either, but I usually point them to the direction of their CPA. I say, take that ultimately up with your
right,
CPA, and you guys make that decision together. And I do defer that to the tax professional. I don't dispense that
yeah.
advice. I certainly let them know the rules, and I do have to nitpick. It's actually a gap
You
rule, which is governed by FASB, and it's actually not an IRS regulation, but that's okay.
well, according to Intuit's article, they reference
Okay, okay.
some obscure IRS cash based reporting
Yes.
regulation. But then that begs the question: well, why doesn't desktop do this if this is a regulation?
Yeah, I didn't realize that desktop didn't do it, but I also was a desktop user a long time ago, and I, in recent years, hadn't been a desktop user. When I came back to QuickBooks world, I went straight to QuickBooks Online, so I'm more familiar with seeing that
Yeah.
unapplied cash payment thing. I didn't realize that wasn't in.
Yeah, my answer was always, man, don't know.
You know.
But
But so you're saying basically is if somebody is seeing an amount when they're running a P&L on a cash basis, because you're not going to see that account pop up if you're running it on an accrual basis. You're only going
because
to see
again,
it if it's on a
the
cash basis.
fundamental truth is that if you're running it on accrual, it's looking at everything on the invoice,
Right. The invoice
whether it's paid
date
or not.
is the date of
Yeah,
income recognition. So
yeah.
now, so if we're running it on a cash basis and we're seeing that amount, is it fair to say that it's really a timing issue? It's a matter of
Yeah,
the date that you're running a report versus it's running it on an earlier time before that invoice was matched up with the actual payment.
exactly.
Yeah.
And so, when you're running a cash basis report and you're using invoices, that date is the timing of the dating of the transactions becomes super important,
Yes.
right? Because the report is going in sequential order, right? So it's going to be looking at the date of the payment, when that occurred, and regardless of whether or not there's a, it's only going to see it if it's it's not going to, it's going to see it regardless of whether it's tied to an invoice or not. However, the unapplied cash payment is essentially a clearing account when that happens, right? So there's two scenarios of where you'll see money, or you see funds, or you see an amount inside of unapplied cash payment. One, it's easy to understand. You have a payment that's unapplied, right? So it's got to recognize it somewhere on the profit and loss. Two, you have it applied, but the dates are messed up, right? And this is where you're doing some kind of advanced workflows, but using accrual-based transactions to bridge that gap, right? And you mentioned it earlier. I receive a payment up front, right, for an invoice, right? Which, your masters is going to tell you, well, you shouldn't be entering that as a payment anyway. That's unearned revenue, but right? So you're doing it, you're doing what QuickBooks allows you to do, but it's not going to be handled in the way that your bookkeeper, accountant, and CPA are going to want to see that. So when you are receiving upfront payments, you don't want to enter them as customer payments in QuickBooks. You want to do that. You want to do another scenario so that the accounting is right. And we have a whole other workshop on handling upfront deposits. But if that's the simplest scenario of I've received money before I've actually invoiced the customer, right? So now the account, or the accounting, or the transactional dates is going to come across and see, there's a payment. Oh, where's the invoice? Oh, that's another date. Okay, well, I got to put it in unapplied cash payment on this date. And then when I get to the date of the invoice, that's when I will reduce the unapplied cash payment and actually recognize the real revenue of the invoice, because that's where it's happening. So let's show it, shall we?
Okay.
Okay, and we're going to go over here and share this guy, and over here. Oh, I got to show it. I shared it, but I didn't. I shared it, but I didn't show it. All right, so we're just going to use a general. This is a dummy account here. So let's run a profit and loss for this month. There shouldn't be anything in here. Let's see. Oh, of course there is. This month. Run the report. Now there's a couple things in there, but that's okay. That's an expense. All right. And we're running on a cash basis because that's what we're talking about. All right. So we receive, we're going to create an invoice last month. Let's do that. We'll put this guy in here. Selling some candy. $9.62. I'll make it easy, of $100. Really expensive candy. Why is it still $0?
It's not.
Oh, well, the balance due is still showing as $0.
Oh, that's weird. Oh, it's subtotaling. Do you have to tab out or something?
Yeah, let's shenanigans. Let's just save it. And there it is. Okay, it shows up. It was the whole sales tax stuff, I believe. All right, so it's 100. Let's just make it non-taxable for ease of just seeing it. And I'm going to date this last month. All right. Yeah, I know. Oh, why did it go back to? Okay, stop it. Don't you know I'm sharing my screen on a live webinar? All right, so it's last month, April Fool's, $100. Saved it, close it. I'll go back to my reports on a cash basis. This last month, nothing. this month, nothing either, right? So go this month. All right, so nothing's showing here because I haven't paid for it yet. All right, so let's receive a payment. I'll go back to that invoice. And then we'll receive a payment. There you go. It's just $100.
I don't think that was the one.
That's it. No. Stop that. There we go. $100 today. Got the date. All right. And we're going to save and close. So it's applying it together. Right. So normal circumstances here. Go back to our report. So last month on an accrual basis, there's our $100 showing up there for the invoice. But if I run it on a cash basis, last month, why is it still there?
I don't think it's refreshed yet. There you go.
Hang on a second. Let me look at it. Drill in here. Oh, there is 2. Hold on a second here. Oh, no. Oh,
you're still on accrual. Yeah.
I went on accrual. Yeah. On a cash basis. Last month. It's still there. Why is it? Okay, let me just.
Well, did you receive the payment in April? That's why it's saying.
No, it was dated today. So let's go in here and let's look at the transaction. Yeah, there's our 100.
It says there's 2 payments made. I don't know what you did.
What did I did? Ah,
you did something.
Oh, it applied a credit. From,
yeah. Yeah.
From then. Okay. Golly. Hang on. All right. So let's just change the customer to test. Get rid of the, oh, let's not send it to anybody. All right, so far so good. Let's look at our report again. Last month, it always defaults to accrual. All right, no income. All right, good. Now let's go back to our invoice. And we'll receive a payment today. Okay. I'll edit this out in post.
I hope Hector Garcia is not watching this because you're not using Right Tool.
I know. It's over here. All right. So I got a payment. There's one payment for $100. Now, when I run it on a last month on a cash basis, nothing. Accrual. Yes.
Because of the invoice.
Yes, because of the invoice. Now, if I run it for this month, there it is. Accrual, nothing. Cash, $100. Right. Now, what could happen, right, is that these are reversed. You know, maybe I received that $100 ahead of time. Right. So let's go into that and we'll switch the dates around and see the results of the report. All right, so I'm going to change this to today. I know. That oil and water memo. And then I'll go into the payment from here and change the payment to April 1st. Close. And we'll see it is saving, right? Did I click it? I'll click it again. There we go. So we'll see the impact on the report now. reports. All right. So last month on an accrual basis doesn't even show, but on a cash basis, gasp.
That's because you have a received cash payment and the invoice falls in the next month.
Right. Well, what if I run this for this month, right? So that's the gate. That's the thing here. This alphabetically. Come on, where are you? This is up here. Okay, sorry. This month on a cash basis, sales of product income is showing here because we have a negative unapplied cash payment showing up here to wash it out. So I have zero. I have zero on net income, but now I've got this. What is going on here? Right. So when we zoom in on total income, we can see what QuickBooks is doing in the background here. It is removing on the date that it actually gets to the invoice, removing the unapplied cash payment because that was recognized last month because the payment was created last month. This is now washing it out, but then putting it to the right sales revenue account based off of the invoice item that it's pointing to. So that's what you end up seeing a lot of times is this ins and the comings and goings, right? So let me go into, I'm going to do one more thing here and put this ahead of time. So we'll still put the payment before the invoice, but we'll put it in the same month so we can see it all happen in the same month. So we'll do this on May 1st. Save and close.
Or you could just run the report for April and
that's yeah, you got that. You're acting like me. You could actually do this better. Why did it close? Okay, so
are you calling your undeposited funds cash on hand?
I don't know. This is my testing sandbox, so this is not real. Right? It's just
okay.
All right. So now for this month, which alphabetically comes before last, apparently, run it on an accrual basis. All we see is the sales of product income for $100. Now, when we run it on a cash basis for this month, we see sales of product income for $100, but now this nebulous zero in unapplied cash payment income. So when we look at it, look at the grand total for income, there we see the ins and outs, and we see it on the date, right? So it increased and this is part of the challenge of really understanding this fundamental truth of unapplied cash payment is that it has to get to the payment first, sequentially, see what the impact of that payment is, and then when it gets to the actual invoice that it's applied to, then it rolls it back and puts it to the revenue account in question. This can be super challenging when you have a payment that's not in the same period, as you saw by running those the report for this month, and it's out. The payment is outside of that date. You see only half of the story here.
Yeah.
So as long as because a profit and loss is a transitory account or a transitory report, meaning that it will only look at transactions that are in that period of dates that you're looking for. Not looking at things that are outside of that date range. So you kind of like looking in a porthole when you're on a cruise ship. You only have so much to look at.
Yes.
And you don't see the whole picture. You need to go up to the Lido deck in order to get the view.
Okay, I like that analogy. In accounting, we call it a temporary account.
Okay. All right. But that is part of the challenge. And the flip side of this is expenses, right? So same situation is going to unfold if you have a bill payment connected to a bill that
Mhm.
is outside or reversed. Now, what's the easiest way to handle this is change your dates, right? Change the dates of the invoice so that the invoice proceeds, and then unapplied cash payment will never come into
Right.
play when you have the situation where you have a payment connected to an invoice. But sometimes that's not the reality, right? Like you can't necessarily, if the invoice and you want to, if this invoice was not paid in full, right? You want to have the due date and the aging of this report, or the aging of this invoice based off of the date of the invoice, as opposed to the date of the payment and everything else that falls along with that. You can play around with the due dates and you know change the dates, and you have those options. But in the reality of receiving a payment, if you really received a payment before the invoice, then you don't want to connect it like this when you're running it on a cash basis, unless you realize you're going to see unapplied cash payment on your profit and loss. There isn't anything that you can do about that
Yeah.
when you're running it
I
on a cash basis.
I will tell you 99% of the time that I see this, I used to see it a lot when I dealt more with service-based businesses, but um the most of the time I would see it when people would go around and monkey with their invoice dates. And a lot of people will do that. And I usually always say, don't ever do that, because I'm just more of an accrual gal and I like to leave the invoice for when it was actually issued, when
Mhm.
it was earned. And I always tell people, don't mess with that. But I do know that a lot of people will go in and they'll mess around with the invoice date. And when they do that, then they'll see that they have changed the invoice date until after the payment came, and then they'll see that on their P&L because they're
Yep.
running it by a cash basis, and then they'll call me and ask, like, what have I done?
Mhm.
And it's usually always because that they have messed with the invoice date.
Yeah. And then there's some ramifications of changing the invoice date, especially if you've emailed this invoice to the customer. They can
Yep.
see that you're playing around with the dates. Like, what's going on?
Yes.
What's going on over there? Uh,
Yeah. That's why I just
that,
don't ever mess with
yeah.
invoice dates. Like an invoice is a source document. So I
Hmm.
just leave it. If there ever needs to be, it needs to be modified or edited or something like that, that's fine. But I usually don't like to mess with the invoice date.
Now, one thing I wanted to do is change the invoice date, and this is the other ramification that I've just been clicking through. But the date in this, when they're doing sales tax in QuickBooks, that's going to have a ramification on sales tax, whether they're
Yes.
on a cash basis or accrual basis. There, by changing the dates around that, especially if they've already paid for their
Yes.
sales tax, and then
Oh,
they put it in a period that they paid for. It's just, again,
yeah. It causes a
it's like
lot
it's
of
saying
problems.
oil and water, right? So if I do it on the same date, save and close. We don't want to send it to anybody. I saw a question come in. What does that say? My eyes aren't looking when it. Or I'll throw it up there. What does that say? That when a
I
change
don't
is
know. I can't
made.
see anything. Oh, you know what?
Oh,
It's because I made my screen bigger.
there it is. When a change is made to an invoice, does the invoice receive a notification, or do they see the change the next time they look at the invoice? Yes, when you change it, they won't see anything unless they go back to that review and pay um, link and go to pay it again, and they'll see that the date has changed or something like that. They don't get a notification
Okay.
that you've made changes. And of course, I was thinking and talking at the same time, and clicking wasn't the strong suit. So it's all on the same date of May 1st. So if I run it for this month again, right there, we only see the sales of product income. We don't see this clearing of um, going in and out of the unapplied cash payment. I know in the past it probably had that show up in there, but now It does not. Oh, again.
Yeah. Well, you've got it on an accrual basis.
Again, okay. But cash and accrual, same thing. You see it on the same date. So as long as it is the same date or after with the payment, and it's applied to an invoice, you will never see a unapplied cash payment income or unapplied cash payment expense on your profit and loss, or at least that is the way it is today.
Hey Dan, I have a question for you.
Yeah.
So we only have a couple clients that want their reports on a cash basis, and they're service related. Which, fun fact, you shouldn't ever be, if you're doing inventory, you should never use cash basis anyway. But just quick,
well, the reports, I mean, the cash basis reports for inventory are horrible.
Yeah. Well,
that's another fundamental truth.
It's just not GAAP compliant. You have to do it on an accrual basis. Otherwise it's not GAAP compliant. So, question though, for folks, and I understand not everybody does it the way I do it. So for folks that do only want reporting on a cash basis, and let's say I don't know, for whatever reason, maybe they're not using invoices for whatever reason. Can you set your QuickBooks to default to always run on a cash basis? Because it seems to always default to accrual. I think I might have missed that somewhere.
Well, there's two places, and this gets this for accountants who are using in their QBO. One supersedes the other, and sometimes you don't. If you don't if you don't set the defaults in both places, then it's going to be using this one, right? So when you go to your accountant tools drop down here and choose reports, that is where you would set the default for you as the accountant.
Okay.
And where to go? Oh, it's thinking about it. Hold on a second. Let's close some tabs here.
Yeah, and for those that use Right Tool, I wonder if there's a setting in Right Tool also.
Oh, wait a minute.
Oh my gosh!
Report options.
I would turn into Hector Garcia. I'm like, you could save like 4 seconds.
I know, precious seconds.
That's literally how he talks.
Yeah. So here's the report and tools defaults for accountants, right? So all summary reports, so balance sheet, profit and loss, anything that's a summary report will default to last month from to on this basis, right? So you would change it to cash here.
Yes. Okay.
Even though there's no place to save.
I don't like that.
It's one of those things of
you just have to trust it that it's saving.
You assume that it's saving.
I need a button.
Right. But also here in the company settings, when you go into the company settings, and where do they move it to? Here we go. No. Where is the company? There it is. The accounting method here is accrual, right? So a lot of times I would get a phone call, right, that would say, hey, I set it to cash, but it's still running on accrual, right? And if they're the accountant, those reporting options has to be set also to cash or accrual. They both have to match, right? So this will show up where like, hey, client, they run it on a that when they run the same report, balance sheet, it shows up on an accrual basis. When I run it, it shows up on a cash basis, or vice versa, right? So
in QBOA accountant, it needs to be updated in both spots.
Right.
But in my client, if they're using it and they want to see it, they only have to update it in this, right?
Right. Right. Okay. All users who are non-accountants, this takes effect. All users who are accountants, the accountant tools takes effect.
Okay.
So there we got two fundamental truths in one in one workshop there.
Yeah. All
right. So I'm going to stop sharing there. So, whoops, we got big again. We are.
I say my daughter knows every single line from every single Hamilton song. That's a Hamilton song. Wait, what'd you say? fundamental truths at the exact same time.
All right. So if we get her to rewrite Hamilton to QuickBooks, maybe she'll think QuickBooks is cool.
Yeah. Oh, I'll tell her Alexander Hamilton used QuickBooks when he was creating the U.S. Treasury. That'll make her
before
like
the
it.
duel.
Yes.
All right. Well, we're having too much fun here, but hopefully you got some nuggets out of unapplied cash payment. We will take this video, also put it on that blog article as well, so it's all in one place for you. And next week, we're actually going to start talking about this whole new invoice experience that people are being forced to.
My favorite.
Right. We'll talk about some of the good, the bad, but mostly we'll talk me.
Oh, that's weird. You were frozen that whole entire time.
So were you, but at least yours was probably more flattering than me.
No, yours like completely just went black.
Oh, how odd. Yeah, Airbnb that we're in probably doesn't have enough bandwidth for multiple things that we're doing here. So sorry about that. We'll fix that in post. So I'll wrap up today, and we will see you next week on the Workshop Wednesday.
Okay.